What's good, all my trader and investor homies? The boys over at Wall Street Bets are at it again, and I had to go get the Going to the Moon sweater out of the dryer because it's fitting for what's happening right now with GameStop and AMC. So we're going to do a little bit of live analysis on both GameStop stock and AMC stock. I'll provide my perspective, both short-term and long-term, for GameStop and AMC. So yesterday, into the close, GameStop right here was trading at around $50 a share, and it got some volume coming in, tons of volume coming in. The boys over at Wall Street Bets started going YOLO. They started going YOLO, and it went absolutely insane into the close and after hours from $50, broke and tapped $200 and then pulled back. But it's still holding up. It's holding up over that $100 support, and it's consolidating under that $200 resistance. So we're getting a lot of choppy action. That doesn't look like a big move, but that's from $100 all the way up to $200 that we're consolidating in. So it'll be interesting to see whether we continue to chop around or we get that move up over $200 a share. I think short term, if we can get that break over $200 and it can hold over $200, we could see a move and a retest of the recent highs. Let's take a look at AMC. AMC is more of a sympathy play following GameStop. As volume came into GameStop, we saw volume come into AMC. So they're running hand in hand together. So I think GameStop is going to be the leader, and we will see AMC kind of follow what GameStop is doing. So AMC yesterday, AMC has been on a nice uptrend the past few days from like $5.50, and yesterday after hours we tapped highs of $11.40 per share. So it is strong. It has been strong. Both of these tickers still have very high short interest. Let's break down what I think about both companies, and then we'll talk about my short-term price targets, my short-term perspective, and what I think about both companies long-term. First, I want to break down AMC because I think AMC has a better opportunity to transition their business model. I think AMC has a legit opportunity to survive, and I'm not so sure about GameStop. Doesn't mean it can't break out again. Doesn't mean GameStop stock can't go to the moon, hit $500 a share. I'm not saying that. But I'm saying long term, I think AMC has more upside in a legit position to switch up the business model and actually make something of the company. If you guys who watched the Super Bowl, you guys watched the Super Bowl, it seemed like every freaking commercial was about Paramount. Paramount is coming out with Paramount Plus, their subscription streaming model, and it's going to be huge. They had some big actors in those Super Bowl commercials. They must have spent upwards of $6-7 million on Super Bowl commercials. But AMC, in my opinion, needs to do something like what Paramount is doing. I'm not sure if they're going to be able to do it, but I think if they can do it, they are going to be just fine. You're going to have to get deals with the movie studios to be able to stream new release movies on demand. I would pay $10-15 to be able to watch a new release in my house, no doubt about it. 100%. Would you guys watch a new release movie on demand at your house? I would, for sure. So I think AMC needs to follow what Paramount is doing with that Paramount Plus streaming service. I think AMC can do it. They have talked about partnering up with companies in the past in order to get this on-demand streaming service going. It'll be interesting to see if the movie studios will be down for that. Another big thing for AMC is that Regal Cinemas, one of their big competitors, is completely finished, shut down. No more theaters for Regal. Around here where I live in Atlanta, Regal is the big player in the theater space. They've shut down. That is going to open up some market share for AMC. Another thing we need to consider is that both of these tickers are still extremely highly shorted. AMC, let's look at the short interest. We have FinViz telling me that AMC is 35% shorted. I'm not sure if that's the most recent number, but I do know for a fact that AMC is a heavily shorted ticker. Same with GameStop. Remember last time when GameStop went parabolic all the way up to 500 almost? It was like over 100% short interest. It's saying 30%, but I don't believe that. I think it's higher than 30% short interest. And we know that high short interest fuels these short squeezes. It fuels these explosive parabolic moves. If we go back to the chart and look at the chart for both AMC, the daily chart, and GameStop, that's not a normal move, right? The last time this happened, obviously, that is not normal. A chart that looks like this, that's insane price action. I had people calling me who have never, ever invested in the stock market before, and they were saying, Kev, should I buy AMC? Should I buy GameStop? And I'm just telling them, that's probably not the first investment you want to make in the stock market. And I think that holds true now because this is not sustainable price action. Sure, if AMC can find a base over this $7 area, consolidate for a couple weeks, and then break out from there, and then leg up, consolidate, break out from there, that's sustainable price action. But this kind of stuff, that's not sustainable. And I think short term, I would not touch either of these companies with a 10-foot pole. I wouldn't buy these stocks with your money. I'm not saying on a pullback I won't be interested in AMC, but I'm saying right now at $9.50, I will not be buying AMC. Let's break down GameStop real quick. And from a fundamental business perspective, now GameStop, I think it is a little bit in a deeper pile of dog crap, if you know what I'm saying. From a business model perspective, you have to look at your investments based on a plan, based on a thesis. What is your thesis? How can this company improve its fundamentals? I see an easy way out for AMC, right? Streaming's obviously the future. It's huge. Look at companies like Fubo. YouTube TV is growing. Cable cutting is in full effect. But how can GameStop transition their business model from brick and mortar to online? Why would Microsoft, why would PlayStation want to cut in another company? Why would they want to give GameStop a portion of the pie? They wouldn't. Okay, so I would imagine as the years go on, more and more people are going to be buying their video games straight off the console. So where does that leave GameStop? I don't think it leaves them anywhere. Now, I'm not saying there won't be GameStop brick and mortar retail stores open 10, 15 years from now. It's nice to go into a GameStop, look at the used games, figure out what game you want to buy, maybe turn in your old game, get ripped off on the credit side of things, and then use that credit to buy a new game. That's good, right? But it's not sustainable long term, and I just don't see how GameStop survives over the next few years. That's not to say that they can't squeeze the hell out of these shorts. I'm not saying that. Very well, the stock could make another huge move. But from a short-term and long-term perspective, I will not be investing in GameStop. Does anybody know the current short interest of GameStop? Let's try to look that up. Because I don't think FinViz is getting it right. They're saying 30%, and that's just not right. All right, so here we got Fintel. Fintel is saying, this is a legit website. Fintel is only saying it's 15%. So last time the short squeeze happened, it was more than 100%. There was more shares sold short than existed on the open market, which is what created that huge move. And if we only have 30% short interest, I'm going to find it hard to believe that GameStop can put in another one of these, right? From $10, $15 all the way up to $480. So this may be a short-term pop here that we're seeing now. So we'll see. Somebody says GameStop may go into the PC building business. Okay, but are you going to buy a GameStop PC? I'm not. I'm not buying a GameStop PC. I'm not buying a GameStop gaming console. I'm buying Apple or Microsoft PCs or a gaming PC. That's legit. I'm not buying GameStop. Yeah, Martin, so it says it's 15% short interest. No, that means when you have short sellers, okay, I'll break down what a short squeeze is. So when you have short sellers, right? They're betting on a stock to go down. So let's say GameStop is trading at $100 per share. You can sell it short, meaning you borrow shares from your broker at $100. Then if GameStop goes down to $80 per share, you buy it back, you return it to your broker, and you keep the $20 difference. So you made $20 per share. But what happens when the stock continues to go up, a squeeze results because those people who sold short at $100, they start to have to buy out of their position because they're losing so much money, and that results in a squeeze, and the stock puts in a parabolic move higher. Now, short squeezes are typically not sustainable, and that's why you got this heavy pullback on GameStop the last time it happened. A lot of people got hurt. Bag holders who had diamond hands. I have paper hands, but the bag holders with diamond hands who bought way up at the highs, $400 a share, they got hurt. And you hate to see that, but it just reinforces the fact that you need to take profits when you're up huge. Did you guys see the Roaring Kitty congressional testimony? The, what's his name? Deep effing value. That guy's a G. He took some profit. He locked in some profit. He's set for the rest of his life. And he took out Congress, took out Maxine Waters. It was fun to watch. A normal dude who raked in, I think he made a few $1 million. He's set forever. But yeah, so just to wrap things up, I think GameStop, sure, it can squeeze. I will not be a part of it. I will not buy the dip. I will not be investing in GameStop, especially at these levels. A little more interest in AMC, but not at these price points. I would need to see a pullback, probably down to this previous support area down here at like $5, and I would take interest at that $5 per share area. Now, AMC can survive. They can become a big streaming behemoth. I honestly believe that. But we need to see proof of that. We need to see them come out and say that they want to do that. Said Roaring Kitty did not sell. Jordan, I watched the congressional testimony. He did lock in some profit. He still is exposed to GameStop. He's still holding some of those shares, but he did lock in some profit, and he's set for the rest of his life. He made a bunch of money. I'm a phony? Okay, yeah. All right, Jordan, you have those diamond hands, buddy. Let me know how that works out for you, diamond hands. I'm a big fat phony because I lock in profit. I don't have diamond hands. You hold GameStop at $150 a share and don't sell for the next year, and let me know 1 year from now what's going on. To get back on it, AMC, yeah, AMC under 550 is I'll take a look at it for a longer term thing, and I would want to see them coming out with press releases saying that they're getting into the streaming space. Guys, check out the Patreon. The Patreon is now live. If you want to get access to the private Discord chat, trade with me every day, see what I'm buying, see what I'm selling in real time, there's a link for the Patreon down below. Hit the like button, guys. Hit the like button for my paper hands. If you got paper hands like me, hit the like button. All right, guys, it's going to wrap up the live stream. Just wanted to touch base on AMC stock, GameStop stock. Does anybody have any questions? Anybody have any questions before we end the live stream? Let's see what else. Are the other meme stocks popping off? Nokia, not really popping off. What about BlackBerry? BlackBerry. What is BlackBerry's ticker? Anybody have any tickers they want me to look at real quick? AYRO. AYRO, I like their I like that little EV truck they make. I do like it. And I guess the short sellers covered. This was heavily shorted just a couple weeks ago. It was like 40% short interest. Now Finviz is saying AYRO is only 18.5% short interest. Let's take a look at it real quick. I do like this. I can see this truck being used at college campuses, that type of application, shopping centers, you know, the mall, like utility guys who drive around the mall in those little trucks. I like AYRO for that aspect, but it has made a really big move from $3 to $7. I would have to do some more research, some more due diligence. A lot of people are saying SOS. I just can't buy SOS right now because I was looking at it at like $3. We called it out in the private Discord chat at like $3, and it's just trading 100% higher, and I would feel bad buying it 100% higher than I initially looked at it. I do think Bitcoin mining stocks are going to be a good investment for the next couple of years, but not way off in the future as Bitcoin becomes more and more expensive to mine, harder to find. I think right now Bitcoin mining stocks are going to be hot. I think they're going to be very profitable. It's like gold mining. When you're gold mining, you have like the cost to mine the gold is steady, right? It may cost you $500 an ounce to extract gold. And if the price of gold triples, your profit margin triples because your cost to mine that gold is $500. If the price of gold increases by, let's say goes to $2,000, your profit per ounce of gold is that middle, it's $1,500 an ounce. And the same thing goes with Bitcoin. So I do like the Bitcoin miners on this pullback. Riot's pulled back, Mara has pulled back, and I'm very bullish on Bitcoin. So as Bitcoin goes higher, it breaks out, goes to new all-time highs, I expect these Bitcoin mining stocks to do the same and retest these recent highs. NEO, everybody's talking about NEO. NEO, yeah, I like NEO, but it's really extended still. It's extended still. It's went from what, $5 to $50 in less than a year. If you buy NEO now, I'm not saying it's a bad investment long term, but if you're buying NEO now, then you're buying a stock that's made a huge move. And we've seen what happens when you do that recently. Look what happened to CCIV. Sure, CCIV may recover and go to new all-time highs, but if you chased way up here, you got hurt. And the way to prevent getting hurt is to not chase stocks and not buy in after they made a huge move. Same thing happened with Workhorse. I sold out of my Workhorse luckily a couple of months ago when it was just chopping around. But if you chased Workhorse, you were looking for the USPS announcement hype. What happened? You got hurt. So one of my big rules is to not chase. If you miss out and you watch the stock continue to run for the next couple of weeks or months or years, it sucks. It absolutely sucks. There's no way around it. It sucks to watch a stock that you liked make a huge move without you. But it happens more often than not. If you chase, you end up getting stuck and hurt. One EV stock that I like right now, I'm currently down quite a bit on it, is XL. We bought up here like 20 bucks, and it's right now it's at 1470. But I love XL Fleet long term. I think the USPS contract announcement kind of validated my thesis that hybrid is going to be the bridge that carries us to total electric. And XL, they're in the space of providing hybrid powertrain solutions to fleet trucks. And I think when states start regulating the amount of carbon emissions, we're going to see companies like XL and Hyliion really start to thrive and do better than people initially expected. You have a lot of people who are down on hybrid, but I'm the exact opposite. XL Fleet and Hyliion will have a total electric solution, but they can use their hybrid solution to carry them to that EV solution when the EV tech is ready, right? The Class 8 semi-truck technology is not ready for that. It's not ready. Well, 300-mile range, that's not going to cut it. But hybrid, you can cut it. You can get that, 1,000-mile range on these big trucks. QQQM. What is QQQM? Is that like a short, the triple Qs? Is that shorting the triple Qs? So that's just the triple Qs. That's the NASDAQ, right? I mean, yeah, I like the market. I think the market recovers from this most recent dip. The market definitely recovers from this most recent dip. I think we see stimulus go through, provide an injection of new capital into the market, and we retest the recent highs. I think this is a lot of panic coming in, retail traders panicking out of their positions on this most recent dip on the S&P 500, on the NASDAQ, but we're only off the highs by a few percent. I mean, look at this chart. Every dip, every single dip on the S&P 500, boom, bought up, boom, bought up, bought up, bought up. So if you've been buying the dips over the last couple years, you've done very, very, very well. And I think the trend continues. Sure, I do believe there's going to be a pullback in the overall market in 2021, but I don't think this is it. Zoometica. Everybody talking about Zoometica? Yeah, it has pulled back. You got support at $1.50. I expect the true forma is going to be released in March, right? The true forma is going to be released in March. There could be some hype coming into that release, and that 150 support is looking kind of nice. So I don't hate that 150 dip buy. Look for a retest of the highs. Yeah, I like that. All right, guys, that's going to wrap it up. I'll catch you guys in the next one. Make sure to check out the Patreon. Get your 2 free stocks at Webull. I think they're going to be running that promotion. I'm not sure if through the end of February or they're going to keep running it. But I'll catch you guys in the next one. Until next time, peace.